The most recent idea going around the Bitcoin community is this idea that Bitcoin is the new gold or Bitcoin is like gold. People like to say Bitcoin is an inflation hedge like gold. But there are two types of inflation. There is consumer inflation. This is what people often quote when it comes to inflation. The current rate of inflation in the United States is about 7.5%. The figure is a wide range of goods and services. What the inflation rates do not measure is real assets. Examples would be stocks and real estate. These assets have gone up around 20 to 25%. Another example would be oil prices. All the real tangible assets have gone up over the last 18 months. Over this period of time, Bitcoin has been relatively flat. If someone were to buy a home with Bitcoin in Miami, Florida, they would pay 20% more than then did ago. An ever more extreme example would be Austin, Texas, where home prices are up 40% from a year ago. Home prices as well as stocks are being propped up due to the Federal Reserve quantitative easing policy. To put into simply terms, this policy is the Federal Reserve buying assets such as bonds. This encourages people to use debt to buy assets. By buying bonds as well as mortgage-backed securities, interest rates are being kept low. This has been going on since the financial crisis of 2008. Due to the fact that the Federal Reserve saw deflation as the problem and was trying to stimulate the economy by pumping up asset prices. Yes, they pumped up asset prices, but this only really helped those holding assets while making it hard for someone to buy a new home. Most fail to understand that K is not printing money, nor is it going out into the real economy. All it really does is create when they call the wealth effect. When people see the homes and stocks go up, the feel richer in turn go out and spend into the real economy. If we had a real economy, things like real estate and stocks would fail to their free market prices, not a propped about my central banks. When assets fail in price is when someone should be buying them. If the Fed were to reduce its balance sheet to a pre-2008 level, this would result in a crash of both the real estate and stock markets. This is when you should be buying. But the problem is when these assets go, do so will Bitcoin. Another example of using debt to buy someone something is buying a car. But due to the supply chain problems, people started buying used cars and instead faux new cars. Used cars have increased more than just about anything since 2020. If someone tried to buy a used car with their Bitcoin, they would also have to have paid more since used cars are up around 40%. While Bitcoin prices have remained the same over the same period of time. Then there is the gasoline prices need to fuel the car. The car average price is $4.25. Another example of Bitcoin not buying as much as it could from a year ago. I thought Bitcoin was supposed to be a hedge against inflation? Then why are things going up but Bitcoin has been flat? When it comes to the Bitcoin community, they like to predict when Bitcoin will reach a certain price by a certain period. Whether it's $100K or even $1 million. Or if Bitcoin will someday be priced at $1 million per Bitcoin. What really matters is what you can buy with your Bitcoin. Would you trade it for $1 million in today's fiat dollars? Or in other terms, what is the purchasing power of Bitcoin? I prefer to look at Bitcoin in terms of how much gold it takes to buy it. If you were to price Bitcoin in gold, it would be down 29% since last year. Sounds like a bear market to me when you price it terms of real things. Real assets, not fiat dollars. They need to stop using dollars as a measurement of the value of Bitcoin but compare it to something they are going to trade it for. If you want to speculate what the price of Bitcoin will be someday, do so or you own risk. But as this video shows, going up in terms of dollars does not make someone rich. No more than having $1 million in your account makes you rich or is some hedge against inflation. When the Bitcoin white paper came out, it was designed to be used as digital form of cash outside the dollar system. Nothing was mentioned about a store of value, as I have shown it's not a store of value compared to other assets. Something going up in price is not a store of value. If that is the case, anything that goes up is a store of value. As the saying goes, price is what you pay and value is that you get. If you found value in this video, please like, comment and share. Also check out my other videos on Bitcoin as well as other related subjects in the link in the description.